Hello guys and girls, and welcome back to another episode on the Falcon YouTube channel. Hope you're doing fantastic. And I thought today we're actually filming some content for the revamp of a lot of our new content on the Falcon dashboard. And I thought, do you know what, this would be a great opportunity just to show you a very, very small snippet of what we're going to be working on for our new courses and lots of other things that we're just going to be adding to the members. So this is a concept, 90-90-90 rule. I'm going to get straight into this. So with the 90-90-90 rule, you've probably heard it before, 90% of retail traders lose 90% of their money in the first 90 days. So why is that? This is the question we really want to be asking ourselves. How does this even happen? When I first started hearing of these rules, I almost thought, well, surely that's more difficult. How on earth do you do that, right? And that was because when I originally started learning when I was 18, I started off in stocks. And the good thing that it did teach me there was that stick to 1% per trade of your account. So you've got to understand, when I heard things like these statistics, I was a bit shocked. I thought, how? That's pretty difficult because you've got to lose 100 times of your 1% account, you know? Sometimes you can be right by fluke. So how do you actually blow your account in, 90 days? That's quite difficult. And not to realize that, I was a bit naive in thinking that, but a lot of people, they want to get rich quick and they risk way too much. And this is the first point that I want to talk about, poor risk management. What happens is they decide that, do you know what? I'm going to risk this amount and I'm just going to keep playing with the numbers. And I've got an example here, and this is really important, right? So let's say, for example, you have a £1,000 account, right? You start off in trading, you got £1,000, and you decide, do you know what? I'm going to risk, 10% per trade. How many trades have you got until your account's blown? 10 trades, right? 10 trades. So you've got 10 opportunities essentially, and your account is gone. Now let me ask you, on the flip side, sometimes it's going to work, and this is where people get the worst thing that can happen is that it does work for the first couple. For example, you could risk 10% of your account, be right 2 to 3 times, and then think, oh, this is a good thing to do. I should definitely be doing this, risking 10%. This is working out really well for me. But what happens when this starts to go sour, and you take, let's say, 3 losses in a row, 4 losses in a row? You're now down £400, thinking, I need to learn how to make this back now. How am I going to do that? And then people go from the 10% to then think, well, I need to make back this percentage. I'm going to now risk 25% or 30% or even 50%. Some crazy stories that I've heard anyway. So you see how people get into this category very quickly because they start off with the wrong mindset and no real strategy in place. And it leads me on to this part with no real strategy. So why is that? Why do people, want to learn Forex? They want to make money. They want to provide an income. Why is it they don't bother to learn strategy? It's because we've been brought up in this mindset where almost, you can get this for free. You can get anything for free out there. And I think that really does hold people back because it's like a book, right? You can find books of PDFs for free online. For example, right now, I can assure you there's probably Trading in the Zone for free in a PDF. But the mentality of if you really can't afford it, then I understand. But for the majority of people that can, the kind of mentality to want everything for free. And you go on YouTube, you want for a free strategy, for example, when it comes to something powerful like financial, you want the whole thing for free. You think that everybody's out there to do that for you. But the truth is, there are zero examples, or pretty much zero examples of successful people that were millionaires, billionaires, that have made it or achieved some great wealth, that got their way for free to the top. It just doesn't happen. The people that want to achieve stuff, they go and invest in their education. And it's not just trading, I'm talking across industries, across the board. People that want to get somewhere, they invest. And they understand that things are the cost of business. They buy businesses, they create businesses and don't make any money for 2 years. And guess what? They then scrap that business and they move on to another one. And they don't see that as a loss, they see that was just feedback. That's just the cost of the business, I've learned. And you'll notice that the people that are willing to invest in their education and invest in themselves in general, those are the ones that succeed. And I find this is what happens of why they don't really have any real strategy at this point. And I think it's important to understand that if you don't have a strategy in place, and this doesn't just mean technicals, you need to have a whole strategy, a whole game plan, you're naturally going to fall into this category, which is what we want to avoid you stepping into. So this is more to the beginners that are thinking about, I want to get involved in Forex. And yes, you hear that figure and it might scare you. Well, it will only scare you if you do something silly like this and you start risking 10% or 20% of your account per trade. Stick to 1%. This is what we adhere to in the Falcon strategy. And another couple of points I do want to touch on. So they trade without a stop loss. This one is just insane, but people do it. And you have to understand the psychology of why they do it as well. So essentially, when you're trading without a stop loss, you might have an idea, for example, that let's say for example, you're going short on euro dollar, right? You're expecting that the euro is going to get weaker against US dollar. And you're so fully ingrained in this idea that this is going to go to the downside, that euro dollar is going to go to the downside. You think, well, I don't want a stop loss because what if I'm tagged out and then it still moves in my direction? That's going to annoy me, that's going to upset me. So I'm not even going to set a stop loss. And then what happens? Your £1,000 account that starts going to drawdown. You then go down to 800, 700, 600, 500. At this point, you're down 50% of your account and you're thinking, well, I can't close the trade now because what if it bounces back? This is a gambling mindset. And this is what the gamblers do when they come in with this no stop loss mentality. And then it just links back to the last point, which is where this all really comes from, is get rich quick mindset. They want the get rich quick, to the point that some people say when they have no real risk management, what they'll do is they know that they shouldn't be doing this. They know they shouldn't be risking 10% or even 3% or 4 or 5%. And they say to themselves, look, I know I shouldn't be doing that, but I'm actually quite good at picking, a few entries, and I do get a few of them right. So I know one of these 5% trades that I risk, or I know one of these 10% trades that I risk, I know one of them is going to pay off. And guess what? Once I achieve, I risk 5% and then I make 40, 50%, whatever it is, then I'll stop. Then I'll do that. And it's the same as, cocaine addicts and all these kinds of things. We could go into so much detail, but essentially, stop playing with the numbers, stick to something that's sustainable. You'll thank yourself later on, and move away from this 90-90-90 rule. This is for you to understand. I want you guys and girls to move far away as possible into this 90-90-90 rule and move into the 10%. Put yourself into the category of the 10% of the people that are giving them the best possible chance to succeed. People that have good risk management, people that actually have a strategy, they have a plan, and they have a support network that's going to be holding them accountable. There's lots of things. And it moves me on to a next example that I do want to use actually. Let's take a look at this here. So let's say, for example, let's talk about a strike rate. So this example, we've got £10,000 account. Now this is just to show you, this is not a leveraged or unleveraged account. This is just to show you a simple, mathematics of what can be achieved. You've got £10,000 in your account. Now you're risking 1%, right? This is what you should be risking. If you're risking 1% of the 10,000, we have £100 here. So what you're essentially doing, if you've never heard of Forex or you're new, you're now going to be risking only £100 per trade that you put on. So this is 1% of your entire account. Let's say, for example, over a 10 trade period, we've got 10 trades here. You win 50% of the time and you lose 50% of the time. So at this point, you've got a 50% strike rate, which is pretty average. But again, people still achieved great returns even with lower strike rates, because sometimes you do make a lot of your capital and a lot of your percentage from, a small amount of your trades. But overall, 50% is quite poor to be losing, 5 out of 10. But as you can see here, with the 1%, let's say you take 5 losses, and this happens to be in a row, 5 losses in a row. 5 times 1 minus 5. So that equates to £500, right? Because we times the 5 by the 100. So you're down £500. Now, how do you think that would feel compared to what we just spoke about on, risking 10% of your account on £1,000 compared to this? You're down 500 just of the 10,000. So at this point, you're down to 9,500. Doesn't seem that much of a hit, right? Now, when you look at what we focus on in Falcon, and many other strategies will do similar, they'll have an average risk to reward. So we focus on a 3-to-1 risk to reward on average. So what does that mean for us? Well, if we take 5 wins, right, because we've got the 5 wins, the 5 losses. So these 5 wins times 5 by 3, you've got 15. Now the 15%, that equates to £1,500. Now let's take a look at the net profit. So you've got your 15% that you've made. Now let's take away the 5%. So you've got a net 10%. Your 15%, which is your £1,500, you minus the 500 that you lost, you're left with £1,000. Seems very simple, doesn't it? Seems easy. Surely everybody could do that. Why doesn't everybody achieve that? Why do they find it difficult? Because of what I previously spoke about, the 90-90-90 rule. They can't deal with the discipline, and they don't decide, they decide, oh, this trade, I'm not too sure about this trade, so what I'll do is I'll risk 1% on this one, I'll risk £100. Guess what? That one actually goes and plays out really well. They achieve their 3-to-1 and they end up with £300, right? Now the next trade, they look at it and say, this one looks really good. All the stars align. It's got this, it's got that, high time frame structure. It's got everything. This has to go. Their ego gets involved. They decide, well, just this one time, I'm gonna risk 5%. It's only 5%, it's not too much. And they start flirting with these numbers. Guess what? That 5% doesn't work out. And then they start getting emotional and getting offended. Why? Because their ego's bruised because they was wrong. And they need to be right. is greater than probabilities, but probabilities doesn't care about that. One thing about probabilities that you need to understand is that probabilities is doing the same thing of your strategy, hitting the criteria. It could be the best trade in the world, best trade in the world of your criteria that you think has to play out. And more often than not, it does. And the moment that it doesn't is the time that you risk 3% or 5% in this case. Guess what happens then? You've made a 3-to-1, you've done well, you're up 3%, you're now down 2% because you've lost the 5% on one trade. You was right 50% of the time. You've taken 2 trades, you was right once, you was wrong once. Can you see how when you play with the numbers, you can be doing exactly the same thing, playing with this number here, and be on the wrong side? It could be 2 different people. You took exactly the same trades, right? Exactly the same trades. The person who stuck to the 1% is up a net 2%. He made 3% and he lost 1, you're up a net 2%. The other person is down 2%. They've taken the same trades, but they haven't stuck to this. One of them has and one of them hasn't. So it just goes to show you, don't play with the numbers because you don't know the sequence. And this is the sequence that I've got here. So as you can see, we've got 1 to 10 here, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And you can see I've got red under here and I've got green under some of them as well. So this just indicates wins and losses, red for the losses and green for the wins. So why have I done that? Well, can you tell me the sequence? Do you know the sequence? I don't know the sequence. Nobody knows the sequence. And this is what the important thing to understand. This is the randomness of the market. What we know is if we have a good risk model, what does this teach us? If we stick to 1%, then it's very difficult to fall into the 90-90-90 category because we're sticking to a low risk model. If we achieve our average risk to reward, now this is assuming that you don't close trades down early and things like that, which you'll learn, you'll learn to deal with your emotions and things. This is what, of course, we teach you far more in depth in psychology within the Falcon strategy, but you'll learn that you can never know the sequence. So let's say, imagine this sequence here, loss, loss, loss. How's that person feeling right now after 3 losses? Is that person deviating from their strategy? Are they questioning themselves at this point and thinking, oh, maybe I should add in this Belinga bang, or maybe I should add in this new indicator, or maybe I should focus on this now? Because they don't know the sequence, and this makes people feel uncomfortable. And this is why you need to learn and actually understand how to deal with those emotions and really truly understand what probability means. This is probability. Look at that. Loss, 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 win, loss, win, 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 win. So let's say, for example, -1, -1, -1, -1, this profit here. Let's say this profit, you don't get the full 3-to-1 and you get 1%, because you could end up with 1%, right? So at this point, -4, you've climbed back up a little bit. So you're now at -3 because you made 1%, right? You're back down again, right? Because you've taken a loss. You take another 1%, you back up slightly again. Then this one, you take a smaller profit where it's maybe 1.5%. You're climbing slowly, but you're still not out of the red. And on this one, you might make 2%. You're nearly at break even or just above break even. And at this point, and it could be the last trade that banks you your 7%, which takes you to the +7 or +6, whatever it may be if you're slightly in drawdown. And what it goes to show you is that nobody knows the sequence, but if you stick to a strategy that works over time and you don't deviate, because that shows a very unstable mind, what you'll find is that when periods of tough or the conditions are a little bit different, let's say for example we go through a corrective period and things like that, and we have these different cycles in the market, the easiest and weak thing to do is to change what you're doing over a small sample size. And this is where unstable minds come in. They change things completely and they think, well, I was struggled with that, 2 to 3 month period, because I get it. You got to understand, 2 to 3 months of a corrective period, that's tough on people, especially if you're not consistent yet and you've got a few things to work through in your mind and, you've got to overcome that. I get it. But the most important thing for the long term, I urge you, zoom out, go back and see these corrective periods. They don't last very long, and every strategy will have to deal with a corrective period. But what you need to realize is in the long run, if you have an edge, take it over a larger sample size and you'll be profitable. Try to get comfortable with the fact that you'll never know the sequence, and that's okay. That's a good thing. Imagine if you did have that kind of pressure on yourself where you felt like you had to know the sequence. That'd be an insane amount of pressure that you would put on yourself. So I'm just going to go into these 3 points just a little bit more for a description. These are the leading factors. I want you to just focus on these right now, right? Because I think people don't take it serious enough. You have to treat trading like a business. But if you're not willing, right, to have a stop loss, and you don't know the effects of what that can do, you're going to blow your account. And this is what people do. They just get very, very good at blowing accounts. People get proud of this. They think, I've spoken to people before where they say, I've blown 5 accounts. There's almost something to be proud of. You're only getting good at doing this, You're getting good at blowing your account. And when you're trading without a stop loss, you have to understand that can go further. You might lose your account and go further and start owing your broker money and things like this. So you need to realize you have to take this stuff seriously. And with this strategy, this is what I was talking about, hybrid strategy. This is where people that come in that, sometimes you have a little bit of an ego, and when your ego's in the market, you might be self-taught and think, well, I know this definitely works, and you try and combine things. And I find when people try and combine a strategy with another strategy and think that it's gonna make something stronger or adding more things is gonna be more confluence, that doesn't work. Unfortunately, it doesn't. It's a very, very small few examples of people that have found these hybrid methods that it works for them over the long run. They can make it happen over a short period of time, that's fine. But in the long run, these people tend to fail. And it's a shame because in trading as a whole, if you trade, let's say, for example, support and resistance, and you trade EMAs and you trade a few things, you can make it work for you. But stick to that. Stick to that wholly. Don't deviate and try and add in this and that. If that's the way that you trade and you've got a way that you've got an edge, clearly you've got an edge that can play out because there's not only one strategy that works. If you found that works for you, stick with that. Don't try and add in what Falcon's doing and add in a little bit of this and add in a bit of that. You're going to find over the long run, you're going to get very confused. It might work for a period of time, but you'll get confused in the long run. And again, gambling, people that just come in, no risk strategy, and looking for exactly the same thing that I mentioned before, looking for free videos online. At the beginning, if you've got no money and you're young and you literally have no capital and you're genuinely interested in Forex, then learn as much as you can online for free, right? But don't let that be your forever thing where you almost feel hard done by, that people are not there, giving you this free courses and, making you rich for free. Like, what world do you live in? And this is the harsh reality of it, that people actually believe that, you can get that for free online. Well, you can get a lot of things for free online. It doesn't mean it's going to make you successful. And if you really want to be successful, no successful person goes and searches for things for free. They go and search for things that works and they invest into their education across the board, whether that's property, whether that's fitness, everything. And this is a part that I really want you to focus on, because some people, they don't even realize that they're in it. They're in this kind of get rich quick mindset and they're setting themselves up for failure. They really are making lots of emotional decisions, and they set these targets in which that really sets them up for failure, because you got to understand, I get it. Some people hate their jobs. They really hate what they're doing. They want to use trading as an escape, which is usually the wrong thing. And what tends to happen is they set an ambitious goal. There's nothing wrong with setting goals, but what they'll do is they'll say, right, I don't really like my job. I don't really like what I'm doing. 6 months, I'm going to give it 6 months. And they put this kind of deadline on when they should be successful. And they set these unrealistic targets of when they're going to be profitable, when it's going to happen. So what happens? 6 months comes by, they actually work really hard, right? They work smart. They've done everything they need to do. They're on the right path. 6 months comes along. I'm not consistent. I'm not profitable. I'm not where I want to be. This doesn't work, or I'm not happy. And all these kind of emotions come in. And it's because they still can't get out of this get rich quick mindset. And when I say get rich quick, I don't mean get rich quick as in 1 week or 4 weeks. 6 months still falls into that category. And this is where people need to get out of this, so they don't realize when they're within it. Because the easiest way to realize that if you're in a get rich quick mindset, you're normally setting these deadlines on when this has to happen and not realizing that the outcome of what you want, the financial freedom, is a side effect of having great processes. And if you've watched any of my previous videos on YouTube, you're going to start to learn things here. Within Falcon, we focus heavily on processes and understanding the psychology behind why all of this garbage of why people fail, how to move away from that and get into the 10% and move yourself out of that 90-90-90. I don't want any of you there. And I know so many of you are learning Forex, you want to get involved, you might not even have a strategy, you might not even have a mentor. Make sure that you invest in your education, whether that's Falcon or somewhere else. Find something you can stick to, because I promise you it will serve you in the long run. And surround yourself with good people as well. Surround yourself with people that don't constantly criticize you. Surround yourself with people that just want to help you. You might be in a community, for example, and you're new, reach out to people, especially if you're a Falcon member, by the way. Absolute pleasure to have you. And our community is so unique. Absolutely, I always get a smile on my face when I mention the Falcon community, because everybody is, authentically so helpful, and they really want the best for people. So if you're feeling like, you've just come in firstly, a big warm welcome, but make sure that you reach out to as many people in the community as possible and that you move into that 10% of people and give yourself the best possible chance. Set yourself up for success, essentially, not failure. But guys and girls, this went on for a little bit longer than I expected, but you know what? I hope it provided a lot of value for you. I really enjoyed filming it and we thought, you know what, this is a great opportunity at this point. We've got so much more to film that we're going to be putting on the members dashboard, and this really does just scratch the surface. So I really hope you enjoy it and you've been enjoying the content. And again, remember to like, comment and subscribe, because we're going to be constantly releasing new videos so you're always in the loop. Have a successful week ahead. I'll speak to you soon.